Welcome to the Lighthouse Financial Advisors Money Over 50 podcast with Dallas Davison and Michael Hogue. This information is general in nature and does not take into account your objectives, financial situation, or needs. Therefore, you should consider whether the information is appropriate for you and your personal circumstances. If you require personal advice, please contact Lighthouse Financial Advisors. Here are your hosts, Dallas Davison and Michael Hogue.
Welcome to Money Over 50. Today we are talking about providing a hand up, not a handout to your adult children. Michael, your topic. What you talking about here?
Dallas, I'm standing up on my
Soapbox again.
Metaphorical soapbox right now. Not my literal soapbox.
I wonder why soapbox is. I'm sure there's probably some.
Wasn't
reason.
it back in the town square of the day?
Yeah.
The biggest to get elevated, you stood up on a soapbox.
Yeah, why was it a soapbox?
And the soapbox, I don't know for sure,
Yeah.
but I think it wasn't the soapbox that we know now that you take on camp. It was a
wooden box
big
full
wooden
of.
box.
Yeah, right.
I think.
Yeah. Right. Well, hey, as you are up on your soapbox, what's the concept that you're talking about?
So, I see this so often where people provide a handout to their adult children, as opposed to a hand up, and that handout is going to adult children that either should be standing on their own 2 feet, or should be working. We're not talking about children here that are necessarily first-year apprentices. Or they're still at university or things like that. We're actually talking about what should be fully functioning adults.
Because I think that this ties into. So we've talked about this at different times about if you ask most people what they want for their kids, they list a lot of things like resilience and the ability to push through hardship and like a lot of those things that. And if you then look at how people are interacting with their adult children and things that they're doing, there's a big mismatch there between how people are behaving with their adult children and what they say they want from them.
You're spot on. We have spoken about this before in terms of those types of issues, and the parents that are giving money to their adult children, they look back with fondness at their struggle.
Their own sort of
when
hardships.
when they first moved into a house together and they had some old sheets as curtains and things like that, you hear that, and you can see that they're looking back on it with fondness. Yet they feel that they need to give their children a vastly improved life. And you're right, they do talk about the things that they would like for their children being resilience and independence and all those types of things, but they're certainly not helping the situation.
So
without the risk of talking too much about that from a psychological point of view, I'm going to talk about it from a financial point of view
and practically.
And there's a real danger here. The people that we see that are the worst offenders of this can least afford to be.
Yes.
Because it's generally people between 50 and 60 years of age. Which means that they have
kids between 20 and 30.
20 and 30. Usually smack bang in the middle, somewhere around the mid-20s. And those people or the parents actually haven't had superannuation for their full working life. Superannuation became compulsory in 1992. So they were late 20s most of the time before they actually got compulsory superannuation. And in addition to that, things like the age pension are being pushed out from 65 to age 67. And they're years and years away from qualifying for that. So this is not an exhaustive list, but it's anecdotally the differences that we've seen with our clients. And the ones that do it well provide a genuine hand up. And we're not saying don't provide a hand up to your client, to your children. Not at all. We're saying when you can't afford to, and most people in that range between 50 and 60 can't, don't provide a handout to your children.
Well, I think as you make the point there of a hand, and we'll go through these, but a handout feels in the short term as though it's helping, but even if you could afford to give your kids a handout, you wouldn't want to. You know?
No. So that the first one, a handout, gifting a deposit for a house, or gifting a deposit for a car, or gifting a car. They're examples of a handout. Now, I mean, ultra rich people can afford to gift a deposit for a house or gift the house. We would argue, because we've seen this before, it's not in the best interest of the adult child to do that. So gifting anything, I think, is a bad rule of thumb. Because it's not valued.
Like I say, I guess there's two parts to it. Is that number one, you're not actually, the lessons of saving up for something, and the delay in gratification to be able to save up gradually to be able to purchase something. That's a valuable experience, I think, for most young people to have, and everyone wants their kids to be able to do that. So when you're gifting something, you're taking away that lesson. The second part of it is, which you just touched on there, is the value of that. Most people, if you see a 17-year-old or 18-year-old that has worked at Macca's for 3 years and saved up every dollar they've earned, and they can go and buy a complete old bomb, but they will just treasure that car, and that will be the greatest experience, and their chest is puffing out with pride talking about their car that they bought, even if it's a complete old bomb. And
absolutely, because you when you've done that, you equate the pain of saving and working, and it's not all pain, but you go, okay, I've done X amount of shifts over 3 or 4 years here to save up this money to buy this, and of course you make better decisions when you've done the work to get the item, because you actually say, okay, what's the best use of this money? I've done this work, and I've made these savings. Whereas a gift of any sort, I mean, there's been no pain suffered by the adult child in actually saving for that. So. Gifting anything we find is especially major purchases, is generally a bad rule of thumb. A, for the parents who can't afford to do that, and most people in that age range can't. B, for the children. Now, as opposed to some other clients that we've had who have actually said, look, our son or our daughter have saved 5% or 7% towards the deposit for the house. They need 20%. They're short of that. Would it be okay if we act as guarantor for them? So number one.
So that's an example of a hand up.
That's a hand up. So that's generally a good thing. Now, from a legal point of view, I can't tell you to go and do that because there's some very important legal requirements to act as guarantor. It's as if you borrowed the money for yourself, so you're on the hook for that money. But certainly we've seen it done well with our clients who have had adult children who are saving towards, and this is the important thing, they've actually started the savings process, so they're saving towards the deposit from a home loan. And it's just taking them a while to get there. And they've saved 5 or 7 or 10%. They actually need
20%.
20% for the deposit. So the parents actually say, okay, with the equity in our house, we will go guarantor for a portion of the deposit. And allow them to have the 20% deposit.
That's another good point that you touched on there, Michael, about the key there is that those kids have to have, there has to be an amount that they have already saved.
Absolutely.
And so it can't just be that, hey, we want a house. Can you guarantee the 20% deposit?
That's the very important part. So it can't be, we want a house, let's go looking this weekend, we found one, let's get it, can you go guarantor? There's no delayed gratification in that. So it's important that they've actually considered this and have started the savings journey.
Well, and as you touched on, even from a legal perspective, that's important to prove that you can actually save that your kids are going to be able to afford that home loan. So what you don't want to do is guarantee the loan. They haven't been able to save anything because of circumstances outside of their control, which pops up every year. You guarantee the loan. they haven't learnt any of the habits of how to actually save money, how to delay gratification, how to be able to give things up. So that's when you do actually see people run into trouble, is because those kids haven't built those habits of being able to pay back that loan. So,
Point two, this is probably the worst offenders that we see here. So these are parents still paying for their adult children's registration on the vehicles, insurance on the vehicles, their phone bills. They're three of the big offenders that we've seen. Now, the parents have actually started paying for that while the kids were at uni, for example. I'm going
to push back on this. I disagree. I think that yes, those things are not good, and I don't think that you should do that. But what I see as even more dangerous is that at least a rego bill, it's only $800 every year, and you know what that amount is. And I think you're right in as much as you're not teaching your kids to be able to save that $800 throughout the course of the year. The one that I see as more dangerous is, and you've got written down there, is credit cards.
Yeah, so I mean, usually I've got them all written down together because it's usually a combination of the lot of them. So it's the rego, it's the car insurance, it's the phone bills, and it's the credit cards.
And it's one of those things, whether it's actually the credit card bill that gets paid or whether it's just mum and dad flicking out a few $100 here and there, $1,000 here and there. Yeah. It's to me one of those things where it's pretty hard to overspend on your rego, and you go, there's a lesson to be learned in saving for that and putting money aside and paying for it. But I think the credit cards or the day-to-day expenses are even more dangerous, because not only are you teaching your kids that, if a rego bill pops up once a year, I'll cover that. You're teaching them that no matter what happens week to week or month to month, if you spend a bit more than you earn, it's okay.
It's okay.
I'll come in and top up the shortfall.
Yeah, so as soon as there's any sort of friction point for the adult child, they're running to mum and dad, and usually one of them, one doesn't know, one knows, one knows but chooses not to, and the other one volunteers the money. From the parents' point of view, we're talking about. So look, it's one of those things that starts out. There's different categories there, but it's the sum of all those parts that we find is. Look, it's between $10,000 and $20,000 a year for some people because they have 3 adult children, and that's I guess, and they're doing a few $1,000s.
That's what I mean. It's normally not just one of those things. It's not the $800 rego bill for the 3 kids each year. It's their rego came in, so I paid that for them, and then they got this phone bill of a couple $100, and I paid that, and then they needed to go on their mates, to somewhere for their mate's 21st, so we paid for that, and then we needed to this, and it just becomes a death by 1,000 cuts. It's all those little things, and as you say, the friction point is, I always think this for the adult children, it's a completely logical response to go, if every time I feel a bit of financial pain, I can go and run and get that pain relieved by getting some money off mum and dad, why wouldn't you?
Absolutely.
You'd be crazy to not just go, oh well, that's an easy way to solve that problem. And so,
so
by doing that, you are teaching your kids that that's the quickest way to handle financial pain is not to cut your expenses or to give something up or to do that. You're teaching them to just, you can spend more than you earn and we'll top it up.
That's right. And these are examples of handouts. Now, on the other side, an example of a hand up is if the adult child is genuinely saving for something they want, you could consider matching them dollar for dollar. And it doesn't have to be dollar for dollar.
Some variation,
or some variation of that. But if they've saved, $3,000, and you say, okay, well, you need your first car or something like that. You save $3,000. We'll put $3,000 together towards that as well, dollar for dollar. And you can go ahead and buy that. Again, great lesson. The adult child has to actually give something up, which is usually the partying, and starting to obviously work and save that money, and then you'll match that dollar for dollar or some variation thereof.
And that touches on I guess one of the things that you see a lot is that mum and dad handing money to the kids and no clear communication about, is this a gift? Is this a loan? Is this a matching? Am I matching what you've saved? So there's no lesson to be learned. If the strategy is, we will lend you, $3,000 to top up the amount you need to buy that car, and you will pay us back, and this is the repayment schedule, and this is how it works. That can work. If it's you've saved $3,000, we will top that up. That can work as well. But I guess it all ties back to that thing of what you really need is to be able to communicate to your kids, this is what you can expect, this is what you can't expect.
Yes.
So that it's not just a thing of, well, that's, and it's sort of a joke of, we hear it a lot. People go, well, we lent our son or our daughter $5,000, but we won't expect to see that back. Well, so you gifted that to them.
Just call it a gift.
Call it a gift. Don't kid yourself that, it's okay because we lent it to them and we're teaching them a lesson. If you are going to do that, the same people would potentially say, well, we don't want to spoil our kids. Well, what lesson is that for your kids? I can't imagine that NAB is going to be really happy about it if they go and borrow $300,000 to buy a house and go, we borrowed that, but we don't really need to pay it back.
That's right. Another common thing that we see as a handout is rent and board for free.
Yeah.
So that's a surefire way to keep your kids there till they're 30.
Yeah.
It really does foster laziness.
And you made a point here that's relevant for people with adult children in a certain category, which is that there's no end in sight. They're not saving for anything.
There's no end in sight. So and we're not talking about uni students again, or we're not talking about apprentices. We're talking about adult children that should actually be standing on their own 2 feet.
Yeah.
And it's fine if they live with you.
Yeah.
But they should be paying their own way.
That's right. Yeah.
And even if you, even if you said you're just paying what you use in food, internet, electricity, you're contributing member now, and you should be.
Yeah. And you made the point there that that's because I was actually about to say one thing that I have seen work well for people is to go, okay, well they're going to pay board of $100 a week or $200 a week or whatever it is, but the parents don't actually want the money. They're going to put that in a separate bank account as savings for that child.
And look, to do that, I think as well. Although you don't have to, they're better off actually not knowing about it.
Yeah, that's
because
right.
you're better off actually saying you are paying this. So that they make the mental shift. Okay, I'm paying my own way now.
Yeah, that's right.
If you do want to pop it into an account, and then later on when they say, hey, we're saving for the deposit on a home, wait till they start saving some money and they pull that account out and say, we'll match you dollar for dollar.
Yes, that's right, and that's
so we've already funded that in that situation.
Yeah, that's I guess because that can work really well, with a way for young people to really focus and switch onto a goal is the difference between trying to save for a deposit on a house and paying rent, paying outgoings versus, we've seen that work well with families who go, right, our son or daughter has moved back home and for 2 years they're going to save, $20,000-$30,000 a year, and because they're just focused on this is the goal they want to achieve. And we're helping them achieve that goal.
So that's the difference. So the handout is rent and open-ended rent and board for free.
Yeah.
When your adult children aren't actually saving for something.
Yeah.
Compared to that example, Dallas, where they have a goal, they have a focus, and you're saying, okay, well we'll chip in here. We'll give you rent and board for free. You move back into home, and you can really gain some traction by saving for the deposit on your house or whatever it is that you want to save for. It could be could even be just if they want to go and live overseas for a couple of years.
That's right.
Could be something like that, which is all great stuff. You're helping them that way. So
I think I guess my attitude is there's an overarching theme here and anytime there's family and money getting mixed, sometimes what you see is that there's a lack of communication, and that's all of these different things. Is that if you are doing something for your kids to give them a hand up, if you have to be honest with them in terms of communicating that this is what we will do, this is what we won't do, it has a twofold effect of you're still allowing them to learn all those lessons that most people want their adult children to learn. But it also makes you be honest with yourself and with your spouse. Where, if, as I said in that example before, if you're lending your kids $5,000 and you say, we are going to lend you $5,000 and you are going to pay me back $100 a week for 52 weeks, and by the end of this year you will have it paid back, and versus going, well, I'm going to lend them $5,000. Okay, when are they going to pay that back? Are they actually going to pay it back, or is it just sort of something that we get fobbed off for?
Yeah.
There's a big part of, I think, particularly when you've got adult children, of if they know what you are going to be, I guess what their expectations of what you are willing to help them with and what you're not willing to help them with, that at least puts them in a position where they can make choices knowing what they've got backing them up.
Yeah, that's right. And certainly, besides the lesson for the adult children that should be standing on their own 2 feet.
Yep.
Look, it's important for the parents' retirement savings. So people coming to see us for the first time.
Yep.
Look, it's sometimes good when they're giving their adult children $10,000 to $15,000 a year, because we're trying to find $30,000 on average for a couple. Each year to put into their superannuation.
Yeah.
And if the first $10,000 or $15,000 can disappear overnight because they're giving their 3 children $5,000 each year that they shouldn't be. Look, it becomes one of those things where we can find the money a little bit quicker. That's not to say go and start it now and then come in and see us. But
that's a really good point as well, because most people, if their kids are getting bits and pieces of these handouts, when we sit down with someone and say, right, you've got 10 years to go until you want to retire, we need to find $20,000 a year or $30,000 a year or whatever it is, and that happens to be the amount that they're giving to their kids, it's a pretty easy conversation for them to go back to their kids and say, listen, we've been giving this amount of money out, but your choices are, we can continue to do that, but we are going to run out of money 10 years into retirement, and we're going to come and live with you, or we can cut that out. Most of the time the kids go, oh, okay, I think that's I think I'd rather you save that. And that's, I think, from the kids' perspective, is that it's really just a path of least resistance. Most kids, if they have been raised well, they're not going to sit there and complain and say, oh no, you should be paying this for me, and I want this cash and I want this. They probably just don't realise the position that their parents are in. Everyone always thinks that their parents are these financial success. I think most people, you look at it, your parents have always sort of had enough money for you to do the things that you want to do. It's sort of a hard shift to go, okay, well, my parents, they are getting older, they're not going to be able to work forever, and they may not be in a position that they need to retire. So the ability to have that conversation with your kids can be a handy one as well, to say, look, we've done our work, you're on your own now, we need to look out for number one, and we need to put ourselves in a position to retire.
Yeah, absolutely. I think it does, because it just does creep up on people. People come to see us all the time at 55, and you're right. 5 years before that, they did have 3 children at university. And now they were late 40s, early 50s. And now it's 5 years later, and all of a sudden, we've only got 10 years to go.
That's right.
And hey, we're still paying for. How did this happen? These kids are like 25 now, and we're still paying for all of these bills and expenses. And then so it's that point in time for a lot of people that it pays to actually look at that and to strip it bare and make some changes.
And as you say, not only is that, it's the twofold effect of, not only is that best for the person 10 years out from retirement, but they know deep down that that's actually what's best for their kids. No one wants to teach their kids to be dependent on them and not be able to be independent and resilient and all those things.
I think I'll come down off the soapbox now. It was actually calmer than I thought, because I've really burnt up sometimes.
Normally you go into a bit of a rant about this. So I was concerned when we were going to talk about this one. Is this just going to be me sitting here for 20 minutes listening to you bang on about this, or are you actually going to? But I think those are what I actually like, is that the examples there of, it's not to say that you can't do anything for your kids or that you shouldn't do anything for your kids and that you kick them out of the nest at 15 and go and stand on your own 2 feet and never help them at all. It's really a matter of going, are you helping your kids with a hand up? Are you helping them to become the sort of person that you want them to be?
Yes.
Or are you just plugging holes here and giving out hands out to minimise the short-term pain that they might experience?
Great place to wrap up. Thanks for listening.
Thank you for listening to the Money Over 50 podcast with Lighthouse Financial Advisors. We look forward to catching up again soon.